Good morning, gang. Good afternoon, good evening, or good night, depending on where you are in the world. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. It's for educational purposes only, and it's my view of the markets. And now we've got that out of the way. Let's jump into the Bitcoin charts and discuss what's been happening and what I'm looking for next. First things first, we've had a huge lift in subscribers, so big welcome to all the new people. If you do appreciate the free content, bear in mind I don't get paid for this, then do me a favor, go down below, hit that like button, and leave a comment. Let's see if we can get this channel boosted into the algorithm so people stop following influencers and actually follow some traders. Right, so since our last update we would have been Thursday here, okay? And if you go watch last week's video, there were two options I was talking about for potential shorts to the shorts to be had if we had it. One was a bit of a liquidity grab above this level here, okay, which effectively what I was looking for in that instance was basically just stopping out anyone that's been short in any of this region and this one. Stop these guys out, and if it did start to turn around there, start to break some structure, then great, cool, there'd have been a short trade there. Literally nothing happened. It just went straight through, as you can see. And then the only other level above us that I was talking about, quite simply, was the monthly open. So this is what we're looking at. You can see this is obviously a screenshot from last week's YouTube update. Liquidity above us. If we get above that and flip that, then I'll be looking first and foremost for the monthly open. If we would have flipped monthly open, obviously back at point of control / macro range EQ, but the monthly open was a big level to be aware of, and I explain this because it's down to context. Typically speaking, monthly opens not normally that much of a big deal, okay? However, when we put it into context, we have been in this range, this sideways range now, for 1, 2, 3, 4, 5. This is the 6th month in the same range. Okay, so in context, the monthly open was a big level, which is why I was talking about it and why I was interested to see what had happened. And lo and behold, what did happen? Well, we came straight into monthly open. Let's hide the weekly open because we don't need that for now. In fact, no, we'll keep that on because I'm going to talk about it, and we'll get rid of the daily open. Here we go. So as you can see here, on the Friday night, we had a big pump up into monthly open with a big rejection. Came back down, retested it, came back down, retested it, came back down. Sunday night came up and retested it again. Now, I did take a short based on this. However, if I'd have just been trading off the Bybit chart alone, here's some free education for you guys, I wouldn't have shorted this if I was only looking at the Bybit chart. Now, you guys know I trade on Bybit, but I wouldn't have taken it based on that because what do we have? Well, we have a double top, okay? Double top, it's not something that anyone really should trade unless you see something different, okay? Double top, it's taught by idiots, larps, influencers, you know, it's such a poor pattern to trade. However, what I did notice when I did wake up, bear in mind I was asleep at this time, okay? I was awake here. I was asleep at this time. What I did notice is on the index, on the Bitcoin index chart, is it did take the high, okay? We did have a little swing failure pattern to remove some stop losses from those highs. Okay, so for that, it was good enough for me. So when I did wake up at 5 a.m., I came to the chart, and what did I do? Well, I straight away had a look at this because I was interested in shorting monthly open, but I didn't take the first touch, and I don't trade over the weekend because weekend's family time, and I don't really give a crap what's going on. But quite simply, what did we get? Well, you can see here, we came down, we broke some structure, okay? Broke some structure, came back up into weekly open, into the point of control of the whole range, and then that's when we sold off. Okay, so this for me was a nice, simple short trade. I know it was not just me, it's a lot of guys in the group as well. Stops above the high, nice and easy, and then targeting lower. Okay, if it lost this range, there was nothing much in between here and here, just thin air. Okay, everyone loves these thin moves up, and I talk about this all the time. Really thin move up in a straight line. Everyone gets so excited. But what happens with a thin move up? Well, if price gets accepted back into said move, it just goes straight through it. Okay, we had single prints in here, and that was about it. And obviously, you can see this from a visual. There you go. These were the single prints that was created on the Friday, and all we did, we came back down, bounced on top of them, and then went straight through them. Okay. So it was a really simple short, was this in the end. It came back down into the target that we were looking at. I'm coming onto the charts on Monday morning. I'm giving the guys the update for the members, talking through my trading plans, explaining that I'd taken a short, and this is effectively what I was looking for on said Monday morning update. Effectively, potentially a bit of a flat pattern, and coming down here, looking around that 1-to-1 for a bit of a running flat if it's going to hold. I do have a lower target if it does carry on dropping down, but effectively this was the idea that I was looking for. Okay, so that's nice and easy. I say nice and easy. If you don't understand Elliott Wave, it's probably not easy, but as we can see here, what did we do? If I do fib extension from there to there from the top, came down into that 1-to-1. Okay, so if this is going to get a bounce from here, then we've potentially got some sort of running flat pattern. Okay, it still can come down lower. It still can turn into an expanded flat, or it doesn't even have to be a flat at all. That's the beauty about being a trader. Sometimes you might have the idea wrong, but you can still profit, which is how we managed to profit into the 1-to-1. Okay, I do still have some of the short open, FYI. I have taken some profits. My stops are to entry. And if we do start dropping down lower, I will continue to trail my stops down. Okay, so that's where we are today. And then for a long trigger, the only long I had this week was yesterday after a swing failure pattern. So once again, it's something that I was talking to the guys on stream about yesterday morning. It's a little snapshot from yesterday morning stream. I was looking for coming down, taking the low of the Tuesday drop, swing failure pattern, then changing some structure, and then I get involved with a long. So I'm updating the guys in real time in the group, saying this is what I'm looking for. And when it happened, I explained that I was happy to take a long. So at the moment, I am hedged. And that's the beauty of being a trader and not relying on a single direction. So what did we do? We came down here. This is the first time we actually saw some trapped traders out of this whole drop. I'll talk that through in a second. We saw 4 million worth of breakout shorts coming in down here. For some reason, they waited this whole time to start shorting the market. And what did we do? Well, as I explained to the guys, I want to see a market structure break after the swing failure pattern. We came back up. We got 5-minute market structure break. There you go. What did we do? We came into the 382. This for me was a trigger for a long. And since then, we are up here. Okay. It's the beauty of it. And this is the beauty of understanding where you want to trade, only wanting the highest probability trades and waiting patiently for them. So this week I've had 2 trades on Bitcoin. That's it. 2 trades. While the masses blew everything they had here. Okay, and I'm going to explain that now really quickly. What I'm going to do is I'm going to go over to, in fact, we'll look at this chart here. It's my Delta chart. All the way down through here. Now, if you follow me on Twitter, then you will have seen this. I was posting, I'm not interested in longs at all, telling the guys I'm not interested in longs, because every single drop that we had on here, we just had apes buying en masse, and I'm talking large market orders. Okay, these aren't limit orders, these are market orders. So I always say the same thing. What is the market trying to do, or what are the participants trying to do? Well, they're all market longing. Okay, now orders at market are the only things that can move price action. So if all these aggressive market longs are not pushing price action up, what does that mean? Well, it means they're being absorbed by limit sell orders that are larger. So as price is coming down, you can see here open interest is ramping up. Price is coming down. Open interest is ramping up significantly. I'm saying to the guys, I don't want to long this until we see a massive flush. Okay, just before bed that night, before I logged off, I said to the guys, I still want to see lower or a massive flush. And what did we do? Well, we just got a massive flush. Look, all the open interest, all these over leveraged longs just got absolutely destroyed into the area of support that we were looking for. Okay, this is the difference between a trader that actually trades for a living and your average Joe that hasn't got a clue and they're just following the influencers. These guys all got destroyed. Meanwhile, we're just waiting down here to buy. Okay, and we don't mean buy for the long haul and buying for whatever random 100k made up number all the idiots talk about. Just talking about it's a good level of support. Okay. And then you can see here, this is the one that I was talking about here, swing failure pattern down at the bottom of this candle. This is a perfect profile, is this. This is the candle that was the swing failure pattern of the first candle. Perfect profile, all the volume, all the guys here getting stopped out, including new shorts coming into the market, and then what happens? It reverses. It's magic. That's why order flow is really, really important. Okay, really important. Looking at the footprint charts. Okay, I made a joke on Twitter the other day about, you know, all the influencers wanted Wall Street and all the big boys to come trade Bitcoin because they all thought, you know, they'd be able to sell their bags onto them. But the reality is when you invite the big boys to the table, Bitcoin will start trading differently, and it will start trading more like stocks, more like TradeFi. So if you don't understand how to trade TradeFi, then you're really going to struggle with Bitcoin moving forward. It's important that you adapt and you evolve. All the joke patterns and meme lines and everything else, they're not going to do you any favors moving forward, which is why this range here has been very profitable for anyone that understands how to trade. But for the average Joe, they've just got destroyed left, right, and center. Okay. Not picking on people there. It's just you need to keep up with the times. Okay. Right. Now we've got that out of the way. Let's talk about what I'm looking for next. So let's do some TA, shall we? Nice and simple. And again, I am going to keep it simple because it's pointless keeping it overcomplicated. So first and foremost, the same range as we've been in. In fact, let's just get rid of that because I've already got a match out still. There you go. The same range we've been in for 6 months is still valid. The same volume profile that we've been looking at for 6 months is still valid. We can see here what's going on. So right now we're hovering around at range lows. Okay, I've already talked about that. I've taken a long from down here. Okay, it's a valid place for me to take a long now. I'm saying, do you need to take a long now? You do whatever you want. I'm not telling you what to do. The difference between me is I've got my risk in place. If it starts to come down, I won't lose anything. That's the difference. So I'm not telling you what to do here. But if these hold and we can start getting some traction back up, back through the single prints that was created here, if we can start getting acceptance through these single prints, then we can look for a push up higher. Because once again, like this was a thin move up, which then caused a thin move back down through it. If we can start getting some traction back up here, again, thin move, we can move up through it just as fast if we can get acceptance up there. Okay, so if we can do this and then get above monthly open, likelihood is we see a pullback because it's a major pivot. So we're likely to see a pullback. But if we can do that, then once again, I'm looking at the same area. The same area, around 67k. Okay, macro EQ, macro point of control. It's going to be a big resistance zone. Okay, do we get a rejection there? Cool, right, I'll look for shorts. Do we not get a rejection there and we just flip this and start going higher? Well, in that case, your next major zone to be aware of is value area high. What happens at value area high? Do we get above this and flip it and go higher? Or do we reject from it and go lower? We don't know until we get there. I don't have a crystal ball. Anyone that tells you they know that price is going to go that way or go that way, they are talking out of their backside. None of us know. All we know is the areas on the chart where I am interested in doing business if price gets there. So if we can flip this and flip this, then realistically, we then can start looking at range highs / all-time high. At all-time high, do we pop out and then reject and start coming back down, changing some local structure? Great, cool, there's a short trigger there. Or do we genuinely break out and start pushing up? Now, I've said this for the past 6 months. 77k, there's still a big area of resistance to get beyond. Okay, this is tied into Elliott Wave Theory. 77k is a big zone. If we get a rejection around 77k, got to be aware of that. However, if we can flip that, then yeah, we can look for higher prices. And I'll start looking at my more bullish Elliott Wave counts for higher prices. Okay, which then from there we can start formulating some targets. Now, what happens if it goes down? Well, if it goes down, quite frankly, there's not loads of support below us. Okay, the last major area of support below us, if we do a volume profile down here, you can see here we've got value area low here. Okay, we've also got a bit, you can't really see it on this, but we've got a bit of a high volume node down here. Bit of a high volume node down here, and this is around 55k. Okay, if we come down to 55k, start formulating a base and then turning around, great, cool, long trigger. I want to see some market structure broken. If anyone's new to this channel, I don't leave limit orders in these kind of places because I have no idea what's going to happen if price gets there. I want to see price come into my area of interest. I then want to see my setup criteria established, i.e. I want to see some strength in this case because I'm looking for longs. So I want to see some market structure gone. I want to see some people shorting this but not getting follow through. So I want to see some absorption, just like what happened here. And then I look for longs. Cool. If I get longs, then do we get acceptance back into macro range again? Okay. If we start losing this, then likelihood is we're going to create a new low. Okay. Again, it's not somewhere I'm going to be shorting. I'm not going to be shorting down here. Why would you short the lows? Okay. You short resistance. You don't short support. Okay. But if we do start breaking down, then it's the same thing I've been talking about for God knows how long now, because I really do sound like a stuck record. And I'm hoping I'm getting through to some of you, but we'll do a volume profile. In fact, we'll do the different one. We'll do this one down here. Same idea. Where's the volume if we start to drop down? Where is the volume? Well, the volume is down here around yearly open. Around 42k, as low as 38k. This is going to be the next area that I'm going to be interested in trading. So if price does break down and everyone gets really scared, then what happens if price comes into here? Do we get a bullish setup within this? Zooming into a lower term time frame. Great, cool, there's a long trigger. Do we not get a bullish setup? Let it go lower, no problem. If it goes lower, it's pretty obvious where I'm looking to do business. So a little bit of volume down here, and then the rest of the volume is here. Okay, nice and simple, level to level. The traders at the end of the day. Okay, we're not LARPs. Right, that'll do. Hopefully you've learned something today. Hopefully I saved some of you guys from logging into resistance last week. And as I say, if you are new to the channel, do me a favour, hit that like. If you're not subscribed, consider subscribing. And until next time, gang, as you were.